Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard tab, you will input core inputs or drivers for the model, review the core financials and core charts about the model. Let's start from the launch date. So you can set the launch date of your model. Let's say it's April 20. The next, you need to input the monthly marketing budget broken down by online and offline and cost per visit. So you can use only online, for example, if you just clean the offline stream, or vice versa. If you will use only offline marketing, you can just clean online and that's it. If you will use both, just input the both assumptions for the online and for the offline. So let's start from the online business. Let's say you are going to spend monthly $15,000 in 2020 and it will grow by $5,000 year over year. Then you should input cost per visit. Let's say it will be $10, then 11, 12, 13 and 14. In the same way, you can input the marketing assumptions for offline business. You have all notes for each yellow cell, which will help you to input and understand what you are going to input in the cell. As a result, you have total visitors by years. So the next step is to input your conversion rates or funnel metrics, which will convert from visitor to new customer. So the first KPI is visitors to sales opportunities. Let's say it's 20%. So your amount of total visitors, which is 15,000, will be multiplied by 20%, which is roughly 3,000 for year 2020. The same logic works for all the 5 years. You can also change this conversion rate year over year. For example, 22%, 24%, 26%, 28%. The next stage is to convert your sales opportunities to engaged opportunities. So you have another conversion rate, for example, 60, 70, 75, 80, 82. So your 3,000 sales opportunities will be multiplied by 60%, which is roughly 1,800 of engaged opportunities. And as a next step, to convert your engaged opportunities to deals or to new customers. Let's say it will be 50%. It will grow a bit year over year, 57, 58, and 60. So your engaged opportunities amount will be multiplied by this conversion rate, and you will have total deals or total numbers of new customers by years. The next step is to allocate your deals or new customers by products. So first of all, you can set up your offering or product name. You can use any name you want, and you have ability to break down by monthly or annual payment cycle as a percentage. So you can say that, for example, 20% of your business will be on monthly subscription and 80% on annual subscription. If you don't need monthly subscription at all, you can just zero out and all your contracts will be on annual payment cycle, or vice versa. You can input 100% and all 100% of your contracts will be on monthly payment cycle. So I will input, for example, 50 to 50. This is also changeable year over year. And as a next step, you can input on the inputs tab your pricing assumptions. So the main assumption here is regular price per month for monthly payment cycle and annual payment cycle. Let's say it's $100 first year for monthly payment cycle, 110, 120, 130 and 140. And for annual payment cycle, we will give some discount, so it can be less, minus $10 from monthly payment cycle. And you will see the annual payment discount, which is difference between monthly and annual payment cycle. So to the right, you can see the booking price per contract, or amount which your customer will pay for the full payment cycle. For the monthly, which is obvious, this is the same amount. For the annual, it will be multiplied by 12 because your customer will pay all the amount for the year upfront. The next step is to input your churn rates on the customer movement tab. You can also input for the monthly payment cycle by years and for the annual payment cycle by years. And you can input this as a monthly churn. So for example, 5%, 6, 7, 8, 9 for the monthly, and for the annual it can be 6, 7, 8, 9, 10. Below you can see the conversion of how your monthly churn will convert to annual churn for the annual contracts. You can see the formula here, and 6% will turn into 52% of annual churn for annual prepayments. So once you set up all the information about customer, pricing, fixed, variable expenses, cost of services sold, and wages, you may review the core financials, see the charts, see the cash amounts, so you see the active customers, profitability, the cash flow, cumulative cash flow, review the summary, financial charts, customer charts, and SaaS charts. That's model is set up and you can use it. On the SaaS charts tab, you may see the breakdown of main SaaS KPIs, broken down by months for 2 years and for the 5 years. So on the top you may see the total MRR, broken down by months, then MRR movement, which consists new MRR, churn MRR by months, and as a result the active MRR. The next set of charts will show you the lifetime in months for your customer, average lifetime value in dollars, the customer acquisition cost in dollars. For example, in this particular chart you may see that your customer acquisition cost is going down, which is good for your business. The magic number, which shows you the efficiency of your marketing costs in terms of the acquisition of new bookings. The average revenue per customer by months, new visitors and customers, which will show you how your funnel conversion rates works. The MRR growth in dollar amount and month-over-month growth percentage. The SaaS quick ratio, which shows you the ratio between new MRR and churned MRR. And the final chart is LTV to CAC ratio, which is one of the main KPI for the SaaS, which will show you the lifetime value in comparison to customer acquisition costs, and this should be always more than 1. On the financial charts tab, you may see the main financial KPIs broken down by 2 sets of charts, which is 2 years by months and 5 years by months. On the top you may see the EBIT, then EBITDA and detailization about the revenue and about cost of services sold by months. The operating cash flow broken down by cash inflow and cash outflow by months. Your cash balance, some productivity KPIs which consist the revenue per FTE, which is average revenue per FTE and average OPEX per FTE. The revenue breakdown by annual and monthly contracts, and monthly costs breakdown, which consist of cost of services sold, salaries and wages, variable expenses, and fixed expenses. On the customer charts tab, you may see also 2 sets of charts, which is a breakdown of 2 years and 5 years by months with the main customers metrics. On the top you may see the active customers by months, then customers breakdown by active customers with monthly payment cycle and annual payment cycle, and on the bottom of customer charts tab you may see the customer movement, which includes the new customers for particular months, churn customers for particular months, and as a result you may see the yellow line which shows you the active customers for this particular months. On the income statement tab you may see the main line items of your profit and loss, which is total revenue, total cost of services sold, gross margin, salaries and taxes and payroll taxes, variable expenses, fixed expenses, EBITDA, total depreciation and amortization, EBIT, interest expense, net profit before tax, tax expense, and as a result net profit after tax. Please note that by clicking on this plus button, you can unhide each of the category and see digitalization, for example, for the fixed expenses or variable expenses, and for any other category. You may see the values by months and all the breakdown by line items. On the cash flow tab, you may see the cash flow broken down by operating activities, financing activities, and investing activities. Cash flow Indirect shows you the same operating activities, investing activities, and financing activities bar, but it's more collapsed form, so it's more easy to see the values by months and more easy to read the numbers. On the balance sheet, you may see the breakdown of your balance sheet by current assets, which is cash and accounts receivable, non-current assets, which is fixed assets, current liabilities, non-current liabilities, and your equity. The summary of these three statements you may see on the financial statement summary, which will show you the annual numbers for income statement, cash flow, and balance sheet. And using this selector, you may select specific year to see this year by months. So on the top you have the main income statement line items and the charts, which will show you this information by years and by months. Then the balance sheet KPIs and charts, and the cash flow statement, charts, and the absolute values. On the KPI tab, you may see the main benchmark KPIs for the SaaS industry, which is LTV to CAC, churn rate, month-over-month net MRR growth percentage, gross margin, and EBITDA percentage. You may set the industry-specific KPIs which works for your country or for your region. For example, the EBITDA percentage can be 30%, for example. So you may see on this chart that EBITDA percentage now is 30%. All the values calculated by the model using the assumptions you input. You may see in here the values by years, and the same information you may see on the charts, which is LTV to CAC, churn ratio, month-over-month MRR growth, gross margin, and EBITDA. On each chart, the orange column, this is industry-specific benchmark, and blue column, this is the value calculated by the model. So using this table, you can easily compare where are you in terms of the industry-specific benchmarks and how is your business works in comparison to other businesses. On the burn tab, you can find the calculation of cash burn ratio, which consists of average burn amount across the year, average annual cash balance, and calculation of cash burn ratio. On the charts above, you can also see the cash burn ratio by years. On the top revenue tab, you may see the breakdown of your revenue by monthly contracts and annual contracts revenue, as well as the breakdown of absolute values by years and the breakdown of percentage allocation by years. On the charts below, you may see the same information on the charts. So this is the percentage breakdown and absolute values breakdown by years. In the next set of charts, you may see the revenue depths and monthly run rate broken down by monthly contracts and annual contracts. You can also see the information for a particular year by clicking on this selector, for example 2023, and here you can see the absolute values breakdown, and on the pie chart you may see the percentage allocation. Also on the revenue bridge you may see the main drivers of your revenue growth between these 2 years, which are also changeable. For example, I can set 2021 to 2023, so you may see the 2021 revenue on the charts on the left side and 2023 to the right side, and the drivers of revenue growth, which is monthly contracts revenue and annual contracts revenue, are also shown on these charts. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with a total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below, you may find expenses depth and monthly run rate for selected year. You are able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge, you may find the main drivers of expenses growth between these 2 years. These years are also changeable. So you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab, you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here, cost of loans you previously inputted on the dashboard, calculation of resource share you may see here, there is also tax rate, and here you may find the weighted average cost of capital. In the valuation model there is 2 valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator evaluation for this particular company. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable. So you may click on, for example, Book Assets and you go directly to this tab. On the cost of services sold, you may set up to 5 cost of services categories as a percentage of total revenue. Let me show you how it works. Example, one of the categories can be the hosting, and let's pretend this will be in 2020 10% of your total revenue, then 11, 12, 13, 14 for example. So on the top you may see the calculation of total revenue based on the assumptions you input before on the inputs and the dashboard tab, and below you may see the calculation of hosting expenses as a percentage of total revenue by years, and you may see this breakdown by months as well. So the summary of your cost of services sold you may see in income statement at the total cost of services sold tab. Here you may see the breakdown by line items and by months. On the wages tab you can input your headcount by categories with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You're not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also, you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option, let it be admin account, which will start in April, which will grow till the end of the model with annual salary of $30,000. Let it be year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary growth, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, which is 2 for the year number 1, 2020. Starting from year 2021, we'll have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these two, in this case 4 headcounts, calculation of bonuses, and calculation of monthly based taxes. You may see an income statement, total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the variable expenses tab, you may input up to 15 variable expenses categories as a percentage of total revenue. Please note that one of the variable expenses line items, which is customer acquisition cost, is predefined. You previously inputted on the dashboard your customer acquisition cost amount, and you can see the immediately calculation of customer acquisition cost by months without any need to input variable expenses assumptions. For all other 14 line items, you can set the name of the category. Let's say it's subscription cost, which can be software subscription, for example, and you can set this as a driver percentage of total revenue by years. For example, first year it can be 5%, and 6, 6.5%, 7, and 8%. So on the top you may see the main driver of calculation for these variable expenses, which is total revenue, and below you can see the calculation of these line items by months. As a summary, on the income statement tab you may see the total variable expenses category, which you can unhide and see all the line items and the amount by months. On the fixed expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, we have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1,550. In April you have 30 days. This means this will be $1,500. Also,
you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly. For example, $500. You can start from July, for example, and you'll have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate, and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously, you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance, let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of growth. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use growth rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items.
On the Assets tab, you may input up to 7 assets line items and change this accordingly. For example, for the line item number 1, office expenses, you can set up the launch date for this asset type, for example March 20. You can input useful time years, let's say it's 1 year, and the asset cost, for example $50,000. So you may see in the calculation below capital expenditure, which is in March 20. You may see the calculation of book depreciation for 1 year according to the useful time. If you will set 2 years, for example, you will see that it will be amortized fully for February 22, which is 2 years from March 20. And you can see the closing net book value of this asset. Additionally, you can input up to 6 other assets line items. So in income statement, you may find the depreciation and amortization amount for each month. In the cash flow, you may see the fixed asset capital expenditure. And on the balance sheet, you may see the total closed net book value for these assets.
On the top of the dashboard, you have 3 placeholders for the debts. Let me show you how it works. You can set this debt or loan name 1 for example. You can set a drawdown amount, for example $1 million. You can set the drawdown date, let's say it's April 20. You can set the term for 40 months for example. Set the interest rate, let's say it's 8%, which is annual interest rate, and you have 2 options to use annuity or to use usual debt. If you will select annuity, you can go to the Capital tab and you will see the calculation for all these 3 debts, debt number 1, debt number 2 and debt number 3. And you may see the debt drawdowns, debt repayments and interest rate. In case if you will select annuity, all your monthly payments in total, debt repayment plus interest, will be the same across all the months. If you will select just usual debt, you will have equal debt repayments, but interest rate will be calculated based on closing debt balance. Also, in income statement you may find the interest expense. On the cash flow you may find the interest paid on the top of operating expenses, and total debt drawdowns and repayments under financial activities. On the balance sheet you may see the total debts closed balance. On the capitalization table you can input different founders and investors contributions, broken down by different dates of funding, with different cost of share for each series, and you can see the dilution of shares after each round, and pre-money total equity and post-money total equity. Let's pretend that we have 2 founders, founder 1, founder 2. So total amount of shares for founder 1 can be 10,000, for founder number 2 20,000. Let's imagine that cost of share will be $2 and the date of founding is February. This means that investment for founder 1 is $20,000, for founder 2 is $40,000. In total they invest $60,000, which you may see here. The dilution is 33 to 67% of shares. So let's pretend that for Series A we have 1 investor and the date of issuance is May. Cost per share is $5 per share and number of shares is 1,000. So total amount of investment will be $5,000. You may see that before the Series A total equity was $60,000, after is $65,000, and investor 1 will have 3.23% of shares, and the shares of founder 1 and founder 2 also diluted, 32.26 and 46.52%. You can also input some amounts for Series B and Series C. The same way you can set up the date, cost of share, and up to 5 investors is up to 5 placeholders for number of shares. The amounts of funding you may see in the cash flow, in the ordinary equity risings, and you may see the balance sheet, which shows you the total equity by months. Also, on the top of the dashboard you can set the corporate tax rate, which works for your country. For example, it can be 30%, and you may see the calculation of corporate tax in income statement in the line tax expense. On the cash flow you may see the corporate tax paid. By default this is December, and on the balance sheet you may see the corporate tax payable by months. On the top of the dashboard you can see the currency and denominator assumptions. The first set of assumptions is currency outputs and currency inputs. So if you need to input and to see the outputs and reports in the same currency. For example, in United States dollars, you can keep this as a default values and keep exchange rate by default as 1. But for example, if you need to input all inputs in United States dollars and see the outputs as a euro, you need to input some exchange rate, which can be, for example, 1.2. So the summary, for example, and all other reports, you will see all the reporting value in euros and all the chart in euros, as well as income statement, cash flow, balance sheet, and all the statements. Another cool option is to use denomination. By default, you will see the 1000, which means that all your reports and charts will show you the numbers in $1,000 or euros in this case. You can select 1, which means there is no denominator in this case, just dollar amounts. Another option is to set millions or billion dollars. So in this case, you will see all values in reports and charts in millions. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.